Content creation is a grind. Late nights editing, maintaining your upload schedule, and hoping that that brand deal finally comes through. And once your channel begins to make money, you're not just a creator anymore, you're a business. And at a certain point, it's important to consider creating an official business structure to protect yourself, your assets, your channel, and to enjoy some of the other benefits that come along with them. So let's discuss that. I'll break down the differences between different types of business structures and give you some tips and knowledge on how to assess which one might be right for you. After that, I'll share some knowledge and some tips on what to do after it's created to help you remain legally compliant, as well as save yourself some administrative headaches later on. But before we go there, you know the drill. We got to start with a disclaimer. This video is for educational purposes only and is not accounting, legal, financial, or other professional advice. On behalf of 80% Financial, this is not a solicitation for services. Please reach out to an attorney or a CPA to ensure that your business structure is set up properly and is suitable for your unique needs. So let's start with the big question. When should you, as a content creator, set up an official business structure for your channel? And the answer is, it depends. So maybe here's a framework to help you think through when might be best for you. Now, this won't apply in every situation. Some people might want to start this from the beginning and others might want to wait. It really depends on your situation. However, the two things that I think of when trying to consider when is appropriate to set up official business structure for a content creator, it's really two things. One, when you are making more than $10,000 a year, which is what, $830 roughly a month, or if you are signing brand deals or working with any sponsors. Because when we think about a business structure, essentially what it is a protection, a shield for your business and your personal assets from liability. So if you're working with a business and that business decides to sue you, if you don't have a business structure, then you are personally liable for whatever that lawsuit outcome is. Now, if you have a business structure and it's set up properly and you're maintaining it properly, then it can shield you from those legal liabilities, and only the business itself, your channel itself, is liable for whatever that lawsuit says. One caution that I do have is to not obsess over this stuff. If you are just starting out and you're not monetizing your channel yet, then focus on that. Focus on your channel and what would help it grow. It's important just not to let the thought of creating a business structure to feel busy or to create busy work distract you from what is actually important, which is growing your channel. Now, whenever you are ready to set up structure, it's important to take these steps seriously. If you're generating revenue and beginning to work with brands and you're not taking yourself and that relationship seriously, it shows. The number of creators that I've seen who are wanting to work with brands who take that relationship flippantly, or they don't uphold certain expectations out of the relationship, is shocking. So don't let that be you. It's fine to be casual within the content itself. That's your personality. That's your job. That's the reason that people are coming to your channel. However, whenever it comes to the business aspect of working with brands and the structure of your business and the operations of your business, that's when you need to be disciplined and structured. Also, don't be afraid to reach out to professionals and hire them to help them with the business pieces. If business is not your thing and all of the administrative stuff behind the channel is not really your thing, it's okay to hire that stuff out. In fact, it's probably prudent to do so. We can maybe cover this in a different video if it's of interest to any of you, but having and growing a team behind you as your channel is growing can be really helpful. Okay, now let's dive into some of the different types of business structures that might be suitable for you and some of the pros and cons to each of those. There are a few primary reasons why someone would want to create a structure like this. One is that it's a viable business. Your channel is growing, you're generating revenue, and you want to start separating the business and the channel itself from your personal situation. The second reason is to protect assets. While taxes can play a role in what type of structure to create, it's important to note that avoiding taxes is not a good enough reason to set up a business structure. Okay, so let's get to it. The first one that we'll talk about is the sole proprietor. That's what you are by default. There's no paperwork and no protection. You and the business, the channel, are the exact same person. If your channel were to get sued, you would be personally sued. You would be held liable for whatever the outcome of the lawsuit is. You should always check with a CPA on this, but you might still be able to deduct some of your business expenses, some of your channel expenses on a form called a Schedule C. And the income that you generate from your channel is taxed at your marginal tax rate. Another note on taxes is that you also pay self-employment tax. When you have a job in which you receive a W-2, if you look at the pay stub, you'll see a line item for Social Security and Medicare. That percentage equaled up is 7.65%. What you may not know is that your employer also pays 7.65%. So the total amount that is taxed from your income is 15.3%. Now, whenever you work a W-2 job, your employer pays for half of it. When you are working for yourself, you pay both sides. Now, one thing to note, the biggest aspect of creating some kind of business structure is liability from lawsuits. Now, for most content creators, your liability, your risk of exposure of being sued is probably very low. Obviously, check with an attorney based on the niche that you're creating content in. You might have higher exposure or higher risk of being sued, but for most content creators, there's probably not a huge reason to just go out and get this done on the first day. Remember, focus on growing the channel before making things more complicated than they need to be. The second structure that we'll talk about is the LLC, which stands for Limited Liability Company. Let's break that down. That means that if you were to get sued, your liability is limited to the assets that are inside the company itself. That means that your personal assets, like your house and your car, are protected. The pros to the LLC is that they are easy to set up, relatively inexpensive, and they protect your assets. The cons, well, I guess this could be pros and cons depending on your situation, how big your channel is, but the tax situation is that you're taxed just like a sole proprietorship. This is what's considered a pass-through entity, which means that all of your revenue and all of your expenses are passed through the entity to your personal tax return, unless you elect to be taxed like a S corporation or a C corporation, which we'll get into here in just a second. In my opinion, these are best for creators who are making between $10,000 and $75,000 a year through their channels. Now, this is just a rule of thumb. There are huge companies operating as LLCs, and there are much smaller companies that are operating as corporations. Please consult with a professional to help you assess which one is right for you. Moving on to corporation structures. There are two main types that you will be aware of. There are more, but for the purposes of this, they're probably not applicable. There is the S corporation and there is the C corporation. So let's start with the S corp. So just like LLCs, S corps pass the profits and losses to your personal tax return. The big win is being able to save on the self-employment tax at a certain level by paying yourself a reasonable salary and then taking the rest as distributions. Just to make this a little bit more clear, let's use an example. Let's say that a creator is making $200,000 a year and they want to bypass some of the self-employment tax. So they set up a S corp structure. They take a salary of $30,000 a year and then bring home the other $170,000 a year as a distribution, bypassing the self-employment tax on the additional $170,000 that they take home. Now, the IRS is going to see this and they are likely going to have issue with this. And so within the IRS code, there's what is considered a reasonable salary. And this is subjective and different CPAs and attorneys might tell you different things. So consult with a professional who has your back if you ever were to get audited. But as a general rule of thumb, you want it to be reasonable. Now, what does reasonable mean for a content creator? Well, think of all of the editing, marketing, that type of work that you do. And what would you pay to outsource that? All of it. What would you pay to outsource your job? Then that might be a reasonable salary for you. Again, consult with a professional, but that's a good rule of thumb how to think about it. So in this scenario, if you're making $200,000 a year, then it might be reasonable to bring home somewhere between 80 and 120, 80 and 150,000, and then the rest as distributions. But again, I'm not an attorney, I'm not a CPA. Consult with those guys. They'll be able to give you a much more accurate number as to what is reasonable and still be able to take advantage of the benefits of an S corp. Now, the cons to operating as a S corp is that it's more paperwork. There's more steps involved. You actually have to run payroll for yourself, and there are stricter IRS rules whenever it comes to S corps. At a certain point in time, it will become worth it whenever you're saving that additional 7.65% from the self-employment taxes. But as a general rule of thumb, starting out with an S corp can be a little bit more challenging. So who do I think this is best for? Probably creators who are generating more than $75,000 to $100,000. At that point in time, it might start to become worthwhile. You just really want to make sure that you are offsetting the amount that you are spending in administrative costs with additional revenue that you're bringing home as distributions. Now, C Corps are typically seen with larger publicly traded institutions, or they're often seen with startups that are trying to fundraise capital. So if you are selling shares of your organization, a C Corp is the easiest way to do so. And it also provides for further separation between the shareholders or the people that are involved in the company and any kind of personal assets. I have seen this with content creators at the very high end scale, that they have teams behind them, their businesses are much more complicated, or they're using it as a holding structure for multiple revenue streams. So they set up a C Corp and then other smaller entities underneath it for further protection of different revenue streams and structures. Now, that can make sense. However, I'm not going to talk too much about C Corps because once you're at the point where a C Corp really starts to make sense, you typically will have a team behind you helping you analyze, assess, and make those decisions. The pros of a C Corp is that there is complete separation between the shareholders or the people who are involved in the organization and their personal assets. A C Corp is seen as a separate person. The downsides of a C Corporation is that you are taxed 2 times, meaning that all of the profits that are generated from the C Corporation are taxed at the federal corporate tax level, which is currently 21% at the time of recording this video. And then you are also taxed whenever you run payroll for each of your employees. So let's say that you as an owner, you operate a C Corporation and you have a couple of team members. Well, if you're generating $1 million a year, you have a C Corporation, your profits are $500K a year, the corporation will be taxed on that 500 grand. And then whenever you run payroll, each individual person that is receiving payroll is also taxed again. So you personally, whenever you receive your paycheck, then you are taxed on that amount again. It's also important to know that the cost of setting one of these up is much higher than any of the other entities, and the ongoing administrative and legal costs are also much higher with C corporations than any of the other entities that we've discussed. I used one of these personally when building a startup, and if you're a small team, they can be kind of a pain to maintain. Also, very quickly, there are a couple of different business structures that are relating to partnerships. So if there are multiple people involved, then you could always set up a partnership to split the ownership and liability of the organization. From my experience, these rarely apply to content creators. Most content creators, at least at the very beginning, are doing everything by themselves, unless it's a channel that has multiple people involved from the jump, or you're wanting to transition to a partnership structure later on. However, if it's just you as the primary person creating content, you own the business, this probably doesn't apply to you. Now, whenever it comes to partnership structures, I strongly urge you to seek legal counsel when setting these up. Things can get very messy very quickly whenever you start talking about splitting ownership and liability between different members. So there are general partnerships, there are limited partnerships. All of those come with varying levels of liability within the organization and expectations from a legal standpoint. So consult with a legal professional before setting up a partnership. They can get a little bit dicey. All right, so for the vast majority of content creators, we've covered the main types of business structures that you need to be aware of, and you might be able to assess at what stage that you're in today and which one might be most applicable to you. I know that we've talked a lot about taxes whenever it comes to these business structures, and it's important to take a step back and look at some of the other benefits that come along with it. I will say that it increases the ease and professionalism when working with brands. If you're a mid-sized creator and you're working with brands and still running everything through your personal Venmo, it looks pretty sloppy. Another benefit to having one of these is creating a separate business banking account and being able to apply for credit under the business itself. And the third is being able to hire help without potential legal headaches or increased liability risk. Okay, one more word of caution that I have about setting up legal structures. The IRS imposes strict rules whenever it comes to setting up formal legal entities. And it's something that's termed as the hobby rule. The IRS uses things like profit motive, business-like operations, and profitability to distinguish between a business and a hobby. What this means is that the IRS may deem your channel a hobby if you are not generating a profit 3 out of the last 5 years. If it's a hobby, you can't deduct expenses for it. So make sure that you're keeping good records proving that you're operating like a business. If you were just running a channel as a hobby and you think it's a good idea to try to get some tax deductions based on your hobby, then the IRS could come after you. I urge you to be careful. When you file taxes as a sole proprietor or LLC, you file what is considered a Schedule C on your tax forms. Tax filings that include a Schedule C statistically have the highest rates of being audited. If you're audited, you really don't want to have to explain that $120 expense at the bar just because you got an Instagram reel out of the night. All right, let's move on. Setting up your legal entity is one thing. Now, what do you do after it's already set up? Here's some basic business hygiene to help keep everything clean, as well as to make it easier on your CPA and anyone else involved helping you on the business side. Number 1 is to open a business-specific bank account. The point here is to not mix funds with your personal life. So any of the expenses that you have for the business, think editors, any software that you use, any other expenses that are business related should come out of the business bank account, and keep all of your personal funds separate from that. Number 2 is that you will have to file an annual report with the state that you created the legal entity in. There's typically a filing fee for this as well. So you have to pay whenever you set up your LLC or S Corp, and then there's an annual filing fee to keep it operating as well. Don't forget about those things. Number 3 is that you will now have to pay estimated quarterly taxes. So if you expect to owe money to the IRS from your business at the end of the year, quarterly, you need to pay in what your estimated owing amount is. If you don't handle your quarterly estimated filings, then they penalize you at the end of the year for that. And many people end up with a surprise tax bill that they weren't expecting. Number 4, and this is more of a financial one, is to track every dollar. That means income, expenses, keep your receipts, make sure that you have all of your records that you're using for your business. Now, to expand on some of these tips, here's some quick tips to make your life easier. I recommend using a piece of accounting software like QuickBooks, Wave, Xero, FreshBooks. There's a whole host of them out there, or you can even use a spreadsheet to track each month's expenses, each month's income, and be able to determine how much is coming in, how much is going out, and then save all of your receipts in a file on your computer. Quick tip number 2 is to hire a tax pro, especially once you hit certain revenue milestones or once you get into some of the more complex tax structures. Then having a tax pro can save you a lot of money. You can expect a CPA to cost anywhere between $250 and $1,000+, but this could be more or less depending on your area and the complexity of your business. Quick tip number 3, once you have a legal entity, you'll have to go to the IRS website, request a EIN or employer identification number. They give those out for free. Typically takes less than a day to receive those. And then you can actually go and apply for a business bank account. Quick tip number 4 is don't get clever with the tax write-offs. Don't be trying to write off super niche things or go on vacation and you checked an email, and so you're gonna write off that entire vacation. The IRS is really cracking down on some of this stuff. Don't try to get clever with it. If you're having to question whether it is a business expense, it probably is not. Quick tip number 5 is to save 20 to 30% of all of your revenue for taxes. Put that in a separate savings account so that you're not accidentally spending it or using it for other things. Trust me on this, you don't want to end up at the end of the year not having paid in your quarterly taxes and suddenly have a huge tax bill. My last quick tip is to create calendar notifications for yourself. And I break these up by monthly, quarterly, and yearly. So every month I go through, I make sure that all of my accounting and bookkeeping is squared away. Quarterly, I will go through and do the quarterly tax filings. And then yearly, you have your business filings or your business renewal, your legal entity renewal, as well as your annual taxes once a year as well. And this just helps me stay organized and helps me not miss something, because it's really easy to just be working on something and then you just completely forget. You know, a quarter goes by, a few months go by, and you realize that you haven't looked at your books in months. That's not really a great place that you want to be. And so, yeah, setting up those notifications for yourself is very helpful. Also, double check with your CPA or other professionals who are in your network to make sure that there aren't any other additional things that need to be done. They can help you make sure that things don't fall through the cracks. Watching your channels grow and generate revenue is a really exciting moment. And the business part of it doesn't really have to be all that scary. I know that there's a lot here, but it's pretty simple once you make the decisions and assess which one is right for you. By setting this stuff up right, you'll ultimately have more freedom, less stress, more options, and at the end of the day, more money. If you found this video helpful, I would genuinely appreciate a like on the video and subscribe if you want to see more content like it. Otherwise, see you in the next video.